Well, hello and good evening to everybody out there, traders for Tradeway here on YouTube, live on Facebook, wherever you're joining us from. I am your host, Blair Nightingale. We get together right here every single Monday night for what we call Market Monday, and it's time for Market Monday, where we're going to do something a little bit different every week, all right? We've had a couple of new series this year that we've never done before, primarily on options. I tell everybody every single time, right, that you can always go back and watch anything we've already done, right? We've done a lot of really cool series to help you know how to protect and promote your money in the stock market. I'll tell you a little story right off the bat tonight. I was listening to just a quick video popped up on YouTube. And Aaron Carter, he's an old, I don't know a lot about his career now, but back in the 2000s, early turn of the century there, he was a big pop star. And one of the things he said was, man, I'd made $500 million by the time I was 18. I made $500 million by the time I was 18. He said in 2014, I believe it was 2014, he said, I filed for bankruptcy. And, you guys have maybe heard the statistics that the vast majority of those who win the lottery end up right back where they started. Because why? Because even if we're making money, right, we've got to understand that money is a seed in our lives. God is releasing finances to us not only as provision, but also as a seed. Doesn't matter how small we're starting with or how big we're starting with. We have to begin to view money as a seed. And one of the things that we do here at Tradeway is to help you protect your seed, right? Protect that retirement money, protect that savings, protect that 401k, IRA, Roth IRA, 403b, whatever it is. Or you say, I don't have a retirement at all. Right? Or I have very little and I should be further along. I need to be further along, right? So we definitely want to protect what you have. Wall Street will say, you know what? You ought to just ride it out. Just let it fall all the way down. It'll come back. Well, what if you're in your late 40s, mid 50s, late 50s? And even if you're in your 30s, compounding returns is an incredibly powerful concept. Why would you want compounding losses? Why would you want to take that kind of risk? Well, you wouldn't. But here, this poor guy, Aaron Carter, like I said, he was a huge pop singer, $500 million before his 18th birthday. And simply because he didn't know that money is a seed. Now, there's probably a lot of complexities to his story, I'm sure, right? Life is happening to all of us. But the point is, I thought, wow. I can't overstate the value of what I've learned in the Tradeway community because I look at money completely different. And that is the goal of us getting together here on Market Monday every single week. We're going to look at different aspects of the market, but my number one goal for everybody here on Market Monday is to have a shift in mindset and a practical approach to protecting and promoting that money. No matter what it is, no matter how big, how small, it all matters. We don't consider money our highest power, but we do consider ourselves stewards of finances in the kingdom, and we want to grow that, just like the parable of the talents. So one of the things that we do is meet right here on Monday night and go through a specific series or a specific topic. Tonight, I'm going to give you guys a market update. We had a pretty significant turn in the market on Friday, so I think it's a great time for me to give you guys a practical market update so you know where the market's at, where I expect it to go from here. That's probably the number one question I get from people when they meet me and find out what I do, right? Well, where do you think the market's going? Now, a lot of people, don't know anything about the markets, so they may not ask. That would have been me, right? In 2015, didn't know anything. I wouldn't ask about the stock market. I would have thought that's for somebody else, right? But not anymore because I've been taught, right? And that's what we exist to help you guys engage in. So that's a big question I get. Where do you think this is going? So I'm going to tell you tonight, this is where I think this is going. Certainly, I'm going to tell you where it is at. We'll look at the chart. I'm going to give you a couple of things so you have a heads up for where we're going from here. Also, Doris, Janet, both in the comments. Let me pop you guys up there real quick. There is Doris right there. Good evening from Dallas. Good evening to you too. And Miss Janet Ortega is with us as well up in Oklahoma. Right? So we got people joining us that are familiar faces and friends. We've got some new people here. Nobody on Market Monday is a stranger though. So go ahead, drop a comment in the box there. Say hello because we would love to hear from you. One of my favorite things, and I'm an introverted guy. I really am more of an introverted guy, but I have to say I really love people, and Tradeway is all about the people. And I get to travel around this great country of ours and meet people every single weekend all over the country. And I get to meet people right here from all over the country online. So I love it when you guys say hi, hello to you. I wanted to give us a little bit of an update tonight, a reminder. Hey, what is Market Monday? What are we doing here? So if you've joined us many times, as I know some of you have, we're getting the foundation in place there. If you have not, then welcome to you, and you know exactly what it is and what you're going to get here. We just finished an options series where I specifically told you week by week, actually, we did a 4-week series on options so that you know how to promote and protect your money using options. If you have a large amount of retirement that you want to protect, I'm going to talk about that tonight, because once we see what's going on in the market, I'm going to remind you there are some ways to protect your money. You want to stick around for that. But also, if you're looking to take a portion of your finances and grow that in the stock market, right? Options is the primary way we focus on that here at Tradeway. And I'll tell you a secret. Most of our people, most of our students have never heard, or at least never used options before they join this community. So we're helping people, I'm one of them, start from the ground up. And so nobody is excluded from that. So you can go back and watch that series. I highly recommend it because options are amazing. Becky also saying hello here. Janet, I don't remember. I think I put you up there, Janet, but just to make sure. All right. Now that that's out of the way, guys, let's talk about the market. We might as well pull it up here on the screen just so I have it for you guys while we are talking about it. You'll notice I've already got a box on here. Right here, you see my crosshair. Let's zoom in a little bit here to give us a better picture. This day right here, that's Friday. Okay, that was Friday. Let's just pull out a couple of simple things here. Okay, most of us on here have probably seen a stock chart by now if you've been at least following here on Market Monday, or if you've done anything in our programs. Maybe you haven't. Basically, this is just a tool we use. It's a visual representation of the movement of the stock. Okay, maybe you've seen a line graph on TV or somewhere, but this is actually using what we call candlesticks. That's these little blocks, and each one of those candlesticks just represents a day. Well, what's interesting about these candlesticks, guys, is that they're really a representation of buying and selling done by humans. Okay, even the high frequency trading, right, is programmed by humans. It's tweaked by humans. Human behavior is driving the stock market. For that reason, we notice patterns, okay? We notice patterns in the stock market. So I want to show you a couple of quick things here. Number one, notice how this goes up, comes down to the line, goes up, comes down to the line, goes up, comes down to the line. Now, we didn't get a bounce at the line here. That's what we like to call that. Here's a bounce, right? Here's a bounce. It's when it comes up off the line, right? There's going to be a Tip Tuesday tomorrow right here on YouTube where I know they're going to teach specifically about what we call support and resistance. What you're looking at right here is a support line. You throw a bouncy ball at the ground, what does it do? Well, it bounces at the floor. If you throw it hard enough, right, it bounces up and it has the energy to hit the ceiling. When it hits the floor, it goes up. When it hits the ceiling, it comes down. And that's what we've seen happening here. So right there, I've laid a foundation to make a method out of the madness, right? It's the very beginning. It's the doorway of understanding how you and I could take advantage of the stock market. If I know where support is, then I have a view into where it's likely to change directions. If I know where it's likely to change directions, I could potentially exploit that change in direction, right? By buying or selling a stock or even an option. That's what's going on here. So what happened, guys? Well, it hits this line, but we don't get a bounce. The next day it falls through, and even here, right? This is Friday. So, right, Friday, Thursday, Wednesday, Tuesday, Monday. So last week when we were together, right? What did it do? It broke pattern. Now, this is the S&P 500. This is an index tracking 500 growth companies across 11 sectors of the U.S. economy. So it gives us a really good snapshot of what is happening in stocks, okay? And what's happening is the momentum, right, from the 2022 lows, where we've really taken a brutal sell-off this year. Why? Because of inflation, because of the Fed raising interest rates, okay? It's dropping. So you may not understand inflation. You may not understand interest rates. If you hang out with us long enough, I promise you, you will, okay? But what you can understand is that you got a valley and a peak, a valley and a peak, a valley and a peak, a valley and no bounce. It fails. Our people know right there, oop, caution, caution, right? If I'm trying to take advantage of any kind of short-term move here, caution. Why? Because the pattern just broke. Do you need an economics degree to understand that? No, you don't, right? We do need some training to understand how to navigate market conditions, but I'm giving you some of that right now, right? Patterns that are reliable, predictable, and repeatable give us the ability to make sense of what seems to be totally random, but it's really not totally random. And that means that trading doesn't have to be guessing, gambling, or just going for it, which is what most people either do because they don't have any training, or that's what they think trading has to be, and so they stay away. They maybe do some long-term investing, maybe a 401k, IRA, Roth IRA, anything self-directed, right? Maybe buying a little bit of stock here and there. But then they also have no idea, in most cases, how to protect that money when the stock market starts to do something like that. Boom. This is actually the chart I'm looking for here. There we go. Here's the highs. As January of this year, 4,800, right? All the way down here, some 26, 27%, 25% down from the highs. Who out there wants to lose 25% on your retirement account? Well, it broke pattern right here. That's where the S&P broke the 100-day, right? S&P, look at these squiggly lines on here, guys. Those are what we call moving averages, right? Moving averages. We show you how to use those. It's literally just an average that's automatically plotted on the screen, and as the name says, it moves. As it gets more data, it adjusts and moves. But this becomes support and resistance points for other traders, and so we can use them. Look what happened here. Bounces off support, hits the 200. That's that white dotted line. Comes back down and fails, breaks the pattern. So I'm giving you guys a crash course here to say the market had an uptrend, but broke it and now is looking pretty nasty. It breaks down. It tries to recover right to that exact line. And then Friday, we have this big drop. Why did we have a huge drop on Friday? We had a huge drop on Friday because the Federal Reserve had what's called its annual symposium, right? Like most of us use the word symposium in life anymore, but they did. They had their symposium that they have every August in Jackson Hole, Wyoming. They got together, and of course, what they do is they release a statement, much like they typically do on Fed Wednesdays, right? When they have a big meeting and they talk to us about whether or not they're going to raise interest rates, which will affect bank loans and business loans and home loans and credit cards and all that kind of stuff that you and I have to deal with. So that's big news when they release that statement. Well, this one's on Friday, and it was this last Friday. They came out, and in short, they said, we're going to be very aggressive. We need to continue to be very aggressive. If you followed us on here for any length of time, you know that that's not what the market wants to hear. How valuable do you think it might be for you to know the kinds of things that the market likes to hear and doesn't like to hear? Right? There's a lot of financial news. I had a young man ask me this past weekend, where do you get your news from? What do you pay attention to? I said, and it's an old quote on Wall Street, if you spend 10 minutes reading financial news, you've wasted 8 minutes, right? There's so much news out there. Most of it isn't news. It's just noise. So we want to show you what news should I pay attention to, because Wall Street only really cares about one or two major news items at any given time. We teach you what those are and how to think it through so that you don't even need to hear it from us. You can decide for yourself. Well, I'll tell you right now, it's Fed, right? It's Fed, it's interest rates. And they said, we're going to be very aggressive. Wall Street didn't like that, and the market dropped 127 points, 125 respectively, right? That's a big drop. Now, for you and I, where do we go from here? Well, we need to say a couple of things. One, what we have here, guys, when we get into our options course, I gave you guys a little bit of an intro here at the beginning of today's Market Monday to say we just did a series on options, right? Well, one of the things I talked about in that series is what we call put options. Now, put options are an options contract, an insurance contract that makes money when the stock moves down. If the stock drops and you're the owner of a put option, you're not losing money, you're making money on the put option contract, right? That's what you want, okay? So we can use puts to actually trade in a downward market. So in step 2, which is our options training, we teach you patterns, okay, that are downward moving patterns. This is an upward one, right? I showed you this. This is an uptrend. But in this box, there's a very specific pattern. And it's in a spot where we would expect this market to be bearish, right? Meaning more so, it may have little bounces, but more so leaning to the downside from here. It's certainly stacked under these moving averages, right? Today getting a bit of a doji where there's indecision, which is likely after such a big drop. I would have actually expected a little bit more of a bounce today, but it did try and then failed. So we're going sideways right now, but we have to make a differentiation between short-term and long-term, because people ask me, well, where do you think the market's going? And my thought is, okay, well, are you looking for short-term or are you looking at long-term money, right? So we have to make that differentiation because, and I'm going to pop something into the chat here. Yes, Joshua says, love the options of options. It's so funny because sometimes I'll be talking to somebody about trading and I'll say, yeah, but we have options. And then it's confusing because are you talking about options contracts or are you just talking about choices? So I understand what you're saying, Josh, for sure. I just popped a link in there. We are going to do a topical webinar. This is free, right? To anybody who signs up for it, free. We're going to talk about the major differences between short-term and long-term, right? There's long-term buy and hold investing, which we believe in, although we take a different approach, right? We want to protect that money. We don't just leave it in all the way down. The longer I do this, the more absolutely insanely ridiculous I think that is. And that's a good setup for me to just ask you guys a simple question. Ask yourself right now, do you have car insurance? Right? It's actually illegal to drive without car insurance. You got to have it. Now, you maybe don't have to have great car insurance, but you got to have something. Home insurance, renter's insurance, health insurance, life insurance, travel insurance even, right? I was looking at some different travel packages yesterday. And of course, all of them, do you have insurance? Do you want insurance, I should say? You know? And my point is this. If we have insurance on all these different things, well, what about 401k insurance? What about IRA insurance? What about retirement insurance? Don't you think maybe that's something we ought to have a conversation now and again with our financial advisor, or potentially with ourselves if we're the one managing it, to know, well, wait a second, I didn't even know that existed. And that's the most common answer I get. I didn't know that existed. You know, it's funny that for as many people I've talked to that say they ask their financial advisor, what's going to happen to my money in a crash? And you know what the answer is? And I've said this on here many times, right? The answer is it's a long game. It's a long game. You got to play the long game, Blair. We're just going to hold it. We're just going to hold it. Okay. How come nobody, and I will say there was one in Atlanta this past weekend, we had 157 people in the room. I did hear one guy raised his hand, which is a good thing. And he said, I've heard of having insurance on my retirement money. Okay, so kudos to that advisor for that. But that's 156 people too few, right? And I have never heard that in any other room. How come we're not being offered insurance? Well, mostly because people don't know how to use it. In our program, we're going to show you, how do I insure this? It's actually not that complicated, guys. It's really not. How do I insure that? I have insurance for everything else. Why am I not insuring my long-term money? We can get into a conversation about, when should I be taking my money out of the market? Is it going to drop? Is it going to go up? I don't want to take it out because I might miss a move up, but I don't want to leave it in because then I might be in for a move down. And it's like, we don't have a crystal ball. We don't know what to do. Well, let's insure it. It's not that complicated to do. And we can show you how to do that. See, we want to put the power in your hands because nobody cares about your money more than you. So why not empower you to know what to do with it? That's the whole thing. And that's what I think about. I'm like, oh my goodness, this kid had $500 million. And in a short time, he had to declare bankruptcy. Now, again, I know there's probably lots of nuance to the story, but that is not a lonely statistic. That happens a lot of time. And I think about, oh my goodness, if I knowing what I know, right? If you learning how to grow money in the stock market, how to protect money in the stock market, how to take tax advantages, all this kind of stuff, this is all what we teach believers how to do in our community. We want to make you super stewards of what you have and what you're going to have. That's the goal here, right? This isn't a get-rich-quick scheme. We're trying to grow you into a place of financial authority and confidence for you, for your family, and for the future. That's the goal. And some of these things, man, not complicated. Not complicated. They're just not common, right? Not when it comes to the knowledge. Now, that's on the long-term side, right? On the short-term side, I mentioned inside that box is a pattern. Right? There's a pattern, a specific downward pattern. And that pattern followed through on Friday. Right? Friday is when it really followed through. Some of you guys out there have taken that, right? Taken that course, and you know exactly what that is. And my point to everybody tonight is just to say, we learn how to find these short-term patterns, and then we can take advantage of them. Right? So we can take a small amount of money. We can begin to learn and practice, right? Making a little bit of money in the market. That's the goal, right? That's the potential. I've got piano tuning artist here dropping in the comments with us on YouTube. And he says, all the institutions are taking their money out. I'm going to put this up here, right? Piano tuning artist. I got to say, I got respect for you. That's an amazing job. I love that so much. As a musician, that is a skill for sure. All the institutions are taking their money out of the market, but they will not take yours out. Well, here's what I got to say. That's a very interesting point. Okay. So If Wall Street says it's a long-term game, you got to just wait it out. If that's what we get told, if we, Main Street, get told that by Wall Street, okay, should we accept that? Well, let's consider how this market actually comes down. All right. How does the market move down? Why does it move down? Even from here, right? Or here, or any of these down moves. It happens because the big money, what we call the big boys over here at Tradeway, the big money is selling. Okay. The market doesn't tank unless the big money, the investment banks, the billionaires, the hedge funds, the mutual funds are getting out. That's what tanks the market. They don't ride the market to the bottom. And that's not my opinion, right? It's like the old reading rainbow, right? Don't take my word for it. Look at the chart. The chart doesn't lie because the chart tells us the stocks are moving down. They only move down when big money sells. We can't move the stocks like that, right? They move those stocks like that. So what we know by looking at the chart is that while they're telling you to stay in, they are actively getting out and still charging you management fees on those mutual funds. It doesn't sound like a very good deal. The problem is that we don't necessarily know what to do with it. That's why we pay someone else to do that. And I'm not saying that they're not, in many cases, well-meaning, but this is simply not good enough, right? When the ship is going down, you better make sure you get into the lifeboats with your life vest, right? If you have them. If you have them. And that's what we try to do here at Tradeway. Try to give people options. Josh, wink, wink, right? Options. We try to give them a life raft and a boat, or even better, right? We want to get you off that sinking ship to start with. That's the goal, right? That's the goal. And that's what we want to do. And that's what's happening here, right? Whether the market moves up or down in the short term, we're going to continue to update you on specific patterns that you can learn to use, right? So that you can trade the markets actively. That is the short-term side. The long-term side, continue to update you on these conditions, whether they're getting better or worsening, right? We've got inflation readings coming up. It's almost September already, which is crazy. But we've got an inflation reading coming up close to mid-September. I think it's on the 8th of September. But it's going to be a big deal, right? One thing that I think we need to be watching here, and I've said this on here before, is we need to be watching the energy sector. Now I'm looking at the S&P XLE energy ETF, which I know that was a lot of letters. This tracks the S&P energy sector. And while we're not really getting up to where we were here, right? I mean, we're looking at $93 where that crosshair is right now, currently sitting at 85, 84 respectively. So definitely seeing energy prices bouncing back, right? That's going to put some pressure on inflation. I don't necessarily think that's going to make it worse than it has been in the past. Certainly not when we were at the highs, which remember is a big driver for the market sell-off, okay? So this is a big deal in the short term and the long term, especially if you're doing anything around that inflation reading, because that's going to be big news, no doubt, right? Expect some market volatility, right? When that happens, there's no question. But as traders, volatility is nice, right? If we know how to manage volatility, it actually can be really nice because it can make trading a lot easier, right? But if we don't know how to approach that, it tends to make trading a lot more frustrating because it can be so unpredictable. You know, there's always a bit of an unpredictable nature to the market because we don't know the future, right? That's not the job of a trader, is to know the future. The job of the trader is to manage risk, okay? And we teach you a system to do that. But what we do is watch these conditions and know how to approach them safely and we can take advantage of some of that volatility, right? That's the goal. But that's definitely going to be part of it. And with energy, as you can see on the screen here, rising up again, that's my concern. You know, the market dropped 120 plus points on Friday, and this thing barely made a dent, right? If I move this guy, you know, it's riding its 5-day moving average. It barely made it to the 5-day moving average when the market was down 120 plus points. That's pretty bullish. And bullish on energy right now, to me, suggests bearish on the market as a whole, because if that inflation reading comes in hot, it's going to be heavy. It's going to be heavy for the markets. And we'll see what happens for sure when it happens. But that's definitely something I will be watching. And if we're getting back anywhere, if we see some more pressure from OPEC and global energy into that 90 plus region again, oof, I can't see that being a good thing for the markets in the medium term for sure. Now, that inflation reading is also not going to be, it's going to be for August, right? It's not just going to be for the first, 8-10 days of September. So if it blows up to this level, after this week, it wouldn't be included in that anyway. And we'll see how that translates at the pumps and how some of the other things you and I have to pay for are really doing on costs. So that's going to be a big deal for sure. Keep an eye on that. That's really what's driving this market here. It's looking pretty soft. If I head over to the Nasdaq, this guy all stacked under these moving averages. I would have expected a little bit more of a push, at least up into those averages today, and then a follow through the downside. If we watch this in the morning, just watch for this to open. Of course, it'll be a candlestick over here, and see if it can break the low that it put in today. All right, see if it can break that low, or if it's holding there, then we may actually find that it puts in a low and we get a couple of days up. But I'm going to be watching that low from today on both the S&P and the Nasdaq in here as well. This, putting in a doji, some strength, but a doji is indecision. Doesn't tell us a lot. It doesn't tell us a lot. And after a 125-point day, that's pretty normal to see something like that happen. So let's see. I want to make sure. Yeah, the truth will set you free, right? Truth will set you free. Knowing what to do, hey, that's a big help. And that's what we exist to do here at Market Monday. So I popped that link into the chat so you guys can join us. We're going to do a deeper dive on the difference between long-term and short-term trading tomorrow, Tip Tuesday, specifically going to teach on support and resistance, identifying these patterns and drawing those lines. Because again, if you can find where the stock pivots over time, you can take advantage of those pivots, right? That's the cornerstone of technical analysis. That's what it's all about. We're going to cover that tomorrow. So you've got your link there as well. If you guys have any questions, comments, concerns, anything at all, you can always hit me up, support@tradeway.com. You just pop Market Monday in there. Let me know. They will send that on over to me, and I will take care of you guys. Appreciate you coming and spending some time with me here tonight. We are all about helping you guys know what to do and how to do it with your money. I appreciate you guys being here. We'll be back with a new series, a new teaching series next week. So join us for that. And know that we've got something going on every day here at Tradeway, right here on Facebook and YouTube. So you can like on Facebook, you can subscribe on YouTube so that you don't miss anything at all. Once again, I appreciate you guys so much for being here.